I've been thinking about something, guys. I'm going to talk about a little bit on before I get into the markets this morning. And first off, welcome to the show. And today is Thursday, September 13th, 2018. Uh, really glad to have you guys here. Now, what I want to talk about is these cryptocurrencies. Isn't this the weirdest stuff? I mean, a lot of you guys probably didn't hear about it until about a year or maybe a little bit more than that, or maybe when it was rising up to $20,000 you first heard about it. Uh, aren't they the weirdest things you ever seen, these cryptocurrencies? But here's the thing. They are real, and they were almost $1 trillion market. Can you imagine? Now, here's the thing. $1 trillion. When they were at their peak, they were $750 billion, the cryptocurrencies. Now, I know people like to speculate and stuff, and there's your average investors in the United States that are looking for something to put their money in, and they invest in things for years. They've invested in things like physical silver, the physical silver market, the physical gold market in the United States. And these markets are quite large, I mean, people buy a lot of physical silver and stuff, buy a lot of gold and stuff. But $750 billion all of a sudden comes into this asset that nobody else hears about. Nobody else knows. All of us, it's like catches us by surprise, and the thing's heading up for $20,000. Like a lot of us are like, where did that come from? What is it? And we had a learning curve. We had to figure out what the thing even was, but it had $1 trillion suddenly come into it. Now, what's getting me is the money, that amount of money. Where did all of that money come from? Now, I know there's Asian investors out there, and stuff like that too, but $750 billion? Now, I could understand maybe $50, $100 billion coming from ordinary investors like you and me, Ma and Pa, and coming from the Asian investors and all of us in the world that want to speculatively invest in Bitcoin. I could understand it maybe being 50 billion or 100 billion or something like that. But $750 billion, I'm just sitting here and I'm thinking to myself, where did all that money come from? Who has that kind of money? And I'm very suspicious about this because of what it did. It's one of the things I'm suspicious about. The more I'm thinking about it is that money is what kept us from going into a deflationary event. And it gave the Fed, and even now, the lingering effect of that money coming into the system, some $550 billion being injected. It's just like, it's doing exactly the same thing as quantitative easing would do, except more so because it's not all being lumped into Wall Street. Bitcoin money is filtering its way down to Main Street. So it's like a shot in the arm for the economy. And it gives the Fed on the other side of this coin, they're withdrawing liquidity from the system, where Bitcoin was injecting liquidity into the system. I'm very suspicious. I'm very suspicious of this. And if what I'm suspicious of is correct, they might do it again. Because as the system starts to falter, and as they're withdrawing liquidity out of one side of it to so-called balance their balance sheet, the Federal Reserve, they could inject massive voluminous amounts of liquidity into cryptocurrencies. And they could do it again. What if they did that? What if they were the guys responsible for driving cryptocurrency up into a $750 billion industry and then and then popping that same bubble that they created? In other words, what if the Fed is the ones that's pumping and dumping the cryptocurrencies? If this is the case, then I would think that they're going to need to pump and dump it again pretty soon, because we're going to have a deflationary crisis. Liquidity's drying up, and they're the ones responsible for drying up liquidity. I don't know what's going on here with all this, but I'm just suspicious. Let's go and take a look at the markets, guys. Let's start the charts right here, and let's get in there, and let's take a look at the cryptocurrency first, Here we have something that liquidity has been drained out something viciously over the past. It's down to $6,400, and I mean it was nearly 20,000 when it was at its peak. But I'm hoping for it to slump off and go cheaper because I'd like to grab me a little bit of this stuff, but I don't want to pay $6,400 a coin. Of course, I wouldn't buy a whole coin; just maybe buy a hundredth or 200ths of a coin, But still, I want to get it as cheap as I can possibly get it, and at a hundredth right now would be $64.90 for a hundredth. I would rather pay $50 for a hundredth, rather than 64. Anyway, that's what I'm thinking in my head. But will this go up or down? I think that she's gonna break through resistance and go to the downside. That's kind of what I'm expecting. I hate to say that, but I don't think the bear market's over yet, and I think it's going to intensify a little bit before it gets better. So I think we're going to have buying opportunities coming up in the future. At least this is what I'm hoping for anyway. Let's take a look at cryptocurrency market capitalizations today. And we're seeing the altcoins are shooting up in price. I should have got in there and got some Litecoin yesterday when the price was 40 some odd dollars. Today it's 53.79. I'm afraid, and we're bouncing back up toward $200 billion market cap. Bitcoin dominance has fell back a little bit to 56.5%. Now let's take a look at the silver price here today. Right now, while we're speaking, silver is shooting up in price. But this is all got to do with the dollar. If we're going to take a look in a minute, we're going to see that the dollar is hurting right now, right at the same time and same second. Let's take a look at the Dow Jones Industrial Average. She's up 152 points on the day. She's over 26,000 again, 26,151. There's a very distinct possibility that this market could actually make a new high. There's that possibility, because money's searching for a home, liquidity searching for a home, even though the Fed's withdrawing liquidity out one side. Bitcoin just pumped $550 billion worth of liquidity in on the other side. And the Fed's chopping away at that. They're taking $50 billion a month away from the other side of the balance sheet, basically. This is why I'm suspicious of that, that the cryptocurrencies are nothing more than a liquidity pump for the Fed. The Fed might be behind it all the way from the very beginning. Maybe they're just pretending like they don't know what in the hell it is. When maybe they're the force behind this stuff. I don't know. I'm just speculating about that. Let's take a look at crude oil prices. Now, remember I said yesterday that some entity is keeping it between 65 and 70 bucks. And remember I said that it crested 70, and I said we should see it drop back. Well, we're seeing the drop back, 1.21%, 85 cents down today. So we're seeing a little drop back in the price of crude. They're keeping it between $65 and $70 for sweet light crude oil. Now let's take a look at bonds and rates today. Well, on the lower end, we've got the bond yields on the low end of the curve. The 3 months is supposedly falling, but the 2 year is rising, and everything else is falling. This is a flattening yield curve. What we're looking at, it's pointing toward a yield curve flattening, and we don't see that U.S. 10-year going above 3%, which surprises me. It's at 2.96 right now. Let's take a look at the dollar today. 94.45. Okay, and the dollar's falling. Right now, the dollar's falling steeply. Take a look back at silver price right now. Rising steeply, and is coordinated with what the dollar's doing. So listen, Thank you guys for listening. This has been your market update for the day. You guys have a really nice day. Have a nice Thursday, and we'll catch you. We'll catch you in the next market report. Bye bye, guys.